Hey, welcome to another episode of the Curiosity Code podcast. We're pleased to welcome Arturo Gonzalez Mac Dowell, a person driving transformation in the fintech world. As the chairman of the Spanish Fintech Association, a co-chair of ETPPA, and veteran of high-tech financial services, Arturo has spent more than 2 decades shaping the European fintech landscape. From pioneering the first account information service in Europe with Eurobits Technologies to advocating for open banking frameworks. Arturo, glad to see you here today. Let's get into the details of fintech market together.
It's my pleasure, Alex.
Hey, it's time for a short break. This episode is brought to you by Product Terra, your fintech innovation partner. And this is why that matters. Over 7 years ago, I created an agency to help fintech entrepreneurs create exceptional user experiences and cutting-edge software. And over the years, our team has expanded to over 30 experts in machine learning, engineering, and cloud architecture. We've guided our clients through all stages, from idea conception to multi-million-dollar acquisition. When it comes to secure fintech solutions, Product Terra is your choice. Now, back to the show. All right, Arturo, you launched some of the first fintech services in Europe, including electronic payments and mobile banking. What were the biggest challenges you faced in the early days, and how did you overcome them?
Well, let me separate my professional career in 2 different stages. So I've worked since 1989. That means that I'm older than I wish I were younger. But I've worked all my life in the intersection between technology, innovation, and financial services. But the first decade was in big corporations, IBM and Banco Santander. So the challenges there were significantly different than the challenges I found after I left IBM in 2000 to join smaller companies. Mm-hmm. So within IBM and to some extent Banco Santander, you are framed in the decisions made by others. And the room or the leeway you have to do things is much smaller. So perhaps you have to be more creative to innovate within the room you're given. In the case of small companies, typically the sky is the limit with budgetary restrictions, of course. So it's a completely different landscape, so I worked in a number of smaller companies before I was hired to start Eurobits in March 2004, mm-hmm. and I would tend to say that I lean towards the very front of innovation. So typically a place where the number of people that are inclined to use the services that you're proposing is relatively small. So the challenge is to make things converge in the same point in space and time. So typically, and it takes some time for you to learn this, technology is never the inhibitor unless you're a hardcore visionary dreaming of going to Mars and stuff like that. So technology allows you to do almost everything. But it takes a while until society is ready to use services that are based on the innovation and technology. So the biggest challenge at Eurobits, which has been most of my fintech life, before even the fintech name was coined, was being able to survive whilst the market was getting ready for the services that we offered to them. So in a sense, we had to ride a long journey through the desert.
Right.
Maybe you're too young for this, but in the early 2000s, whenever you you delivered a presentation to a customer, you always had a number of slides at the beginning about the adoption of broadband and mobiles by individuals and how the percentage was expected to grow. So it was only a fraction of people in society that had access to the internet. So and even as it grew, people were very reluctant to use certain kind of services because there was a risk of fraud, and in our particular case we had to wait until the social network revolution, so that people started losing the fear of interacting via the internet for sensitive things. So in my presentations I often use some pictures from Facebook. Some really embarrassing pictures from Facebook. So if people are willing to share this kind of pictures over the internet, why wouldn't they share their banking credentials to somebody that is trustworthy in order to obtain value-added services? But we had to wait for this to happen. So before, I would say, 2010, so social networks, more or less, you can say they started in 2008. But it took some time for them to ramp up. So 2010, 2012, the things started changing significantly. But until then, it was quite a journey through the desert, and it was a struggle to survive.
So Eurobits, what was the initial offering to the consumers, and how that evolved, alongside with developing the social media technologies, mobile, internet?
The offering didn't change significantly. So from the very beginning, and I would say even before Eurobits, in a company that I worked before that called ISOCO, which was the contraction of Intelligent Software Components. It was a company that was focused in AI, but at a time where I'm going to contradict myself slightly here. It's not that the market was not ready for artificial intelligence. In the case of artificial intelligence, the computing price was too high to leverage the algorithms, and the data availability was too low. So if you look at the algorithms in most of the AI space today, they are decades old, so they're nothing new. But now it's really cheap to access vast computing power, and you have petabytes of information available to use those algorithms on. Whereas 20 years ago, that was not the case. So in this company, we developed the first account aggregation software in Europe. So the concept of SaaS didn't exist. So nobody ever thought that you could have an application on the cloud, at least not practically. So what we sold was software that you installed on-prem on a given customer. But everything that was embedded on the software, there's nothing that there is today that wasn't there. So we had account aggregation, we had PFM, we had alerts, we even had cross alerts, which is linking information from one site to another one to combine that information to trigger some very useful alerts. For instance, if you access your utility information, for instance, your electricity company, you know that you're going to be charged via direct debit a certain amount at a certain date. And since you're also accessing your bank account, you know if there's enough balance to pay that bill when it is due. And if the balance is not enough, then you could either send an alert warning the user, or you could automate a transfer from a different account to top up the one where the bill is going to be debited. So we had all of that in 2001. So in terms of functionality, there's Not much essentially new, maybe use cases, not the functionality itself, but use cases. For instance, we didn't envisage at the time that you could use account information for scoring purposes, which I think it's one of the best use cases today. So somebody that is willing to lend you money, let's say a consumer loan, is going to ask you permission to access your bank account, and based on your transaction history, they're going to be able to know whether you're creditworthy for the amount you're requesting or not. And this is very nice because not only you get almost an instant response, but also the scoring is much better than it was before. Typically, before these kind of technologies became widespread, you were asked, and you're still asked in many cases, the copies of your last 3 payrolls, your your income tax declaration, your social security history, whatnot. But so that gives you an idea of how stable you are at work, and it gives you an idea of your income, but it doesn't give you any information whatsoever about your spending. You might have a nice payroll, but you also may be addict to game, to pornography or whatnot, and then you may not be creditworthy even though your income is good. So with these use cases, you're getting almost an instant response. So in a matter of a couple of minutes, your loan is either approved or rejected. But also the company that's lending you money has a much lower risk of default. So it's very interesting. And there are other use cases like account check, name check, and so technically, functionally, everything was there 20 years ago, but we hadn't thought about those use cases. And I guess going down the road, as other industries also open up, we'll see much different use cases. I think basically we're leading to a space where industries will have to focus on their core strengths. And so you can think of value chains as Lego bricks. So you build a figure with a Lego brick, and each industry will provide only the Lego bricks that they're very good at, and leaving the other bricks to other industries. Whereas currently, as an inheritance of the analog world, you deliver solutions with Lego bricks that you build yourself that are quite crappy because you're not good at them. Right. But there are physical limitations that force you to create those Lego bricks. So let me give you an example, and it's a very simple and trivial one. So when you wanted a loan, say 10, 20 years ago, you went to a bank branch, you fill in a paper form. That paper form was put in an envelope. It was sent to central services. Somebody opened it, studied, typed the data of the paper form in a computer, and it was either approved or rejected. And then, let's say, a week, 2 weeks after you filled the loan request, somebody called you from the branch saying your loan has been approved or rejected. Nowadays, in most cases, you do exactly the same, only instead of filling a paper form, you fill in an electronic form in a web interface or a mobile banking interface. And instead of a clerk typing in the data, there's an algorithm that tells whether you're creditworthy or not, and maybe you get a response in a minute, like I mentioned before in the use cases, one of the use cases of open banking, and maybe in a couple of minutes you have your loan approved and the money in your bank account. But what has happened is that you've digitized an analog value chain. So where we're going is to a place where you will do things, and the example I'm going to give you now is not extremely creative. There are already companies doing this. It's just the tip of the iceberg, and I think much more innovative things will come down the road. You go to a car dealer, you select the car you like, and then the salesman gives you a tablet. You select your bank, you type in your user ID and password, and then the scoring says you're worthy for 80% of the car value, and then you trigger a number of processes, and then your loan is approved, your car is insured, your registration plate is issued, and in a matter of 5 minutes, you are driving out of the car dealer with a brand new car that's financed, that is insured, that has a registration plate, and whatnot. Probably this example is obsolete because in a number of years people won't buy cars anymore. They would just buy it as a service. But it gives you an idea of the sort of things that
prestigious will be powered, backend will be powered by Eurobits, right? Aggregating all the data and just spitting out the results.
Well, not Eurobits, because Eurobits is probably going to cease to exist in a short while. So Eurobits was bought by Tink, which was subsequently bought by Visa. And Eurobits platform has been integrated into the Tink platform, which is probably going to be rebranded to Visa something in the near future. But let's say Eurobits and its descendants would allow to power that. But although we made some how should I say it? We did go beyond finance, not too extensively. I think that what we're seeing in the financial world, what we call open finance, open banking, open payments, will happen in other industries as well. So we're moving towards an open data society, where API technologies would allow to perform what I just described. So basically, different industries will provide aggregators, or in the 90s we call them metamediaries, with the building blocks to create a myriad of services. And these metamediaries will be the ones that will really bring to the market innovative, customized services that we can't even dream of.
Before we move forward to open banking concept, I have a couple of questions. I want to step back because it's so exciting to speak to a person who's been, through the whole evolution of fintech world in Europe, from the time where we were signing up paper forms, and now everything is in your mobile phone. Question I have is, like, the regulations have changed significantly, and Europe, I mean, it's famous for a tough market to be in, because you're dealing with so many different regulations. Every country has its own micro regulation. Then you have European Union. How did you manage, to navigate that in the senior leadership roles? I think last 5 years, right? 5 years in Eurobits, you were a CEO of the company. How did that happen?
Well, I think so. They say, there's a saying that says, the US innovates, China copies, and Europe regulates. And I think that's a sad reality. I think Europe tends to be over-protectionist of incumbents, and that is not a very good landscape for innovating. So I think open banking is a rare case, and it was only possible because it was not regulated. So open banking was possible in Europe before regulation because it stood on top of GDPR. So basically, well, the previous data protection laws before GDPR. So basically, in a nutshell, the data protection law said that your data is yours. It belongs to you regardless of where it sits, and you can do with it whatever you want. And that includes giving permission to a third party to access that data on your behalf and doing all sorts of things, of course, always with your permission. So it was not explicitly regulated, but so that allowed us to do lots of things. Then somebody thought that it would be a good idea to regulate it, theoretically to foster innovation and competition. But the reality is that it has been quite the opposite. So actually, one of the reasons I decided to sell Eurobits is because I thought, and seeing it in retrospective, I think I was bloody well right, that PSD2 was going to hamper innovation. So to work in a regulated industry in Europe is a very, very tough challenge. Very tough challenge. Regulation is complex. It's extensive. It's unclear. And it takes too many years to develop. So PSD2 started being negotiated, I think, in 2013. It only entered into full force in 2019. So that's 6 full years to create a piece of legislation. Then the regulation is extremely detailed, but extremely unclear. So there's a thing called the EBA Q&A tool, which is basically a place where you ask questions to the EBA, European Banking Authority, about the interpretation of the regulation. And when we reached like 300 questions, the EBA decided to delete them and start all over again. And when they answered questions, typically every answer gave room to 2 or 3 additional questions because the answers, just as the legislation itself, were never 100% clear. So it's the cost of uncertainty of that way of doing regulation. It's humongous. So I don't know if anybody has thought about this. So it's really, really difficult to innovate in Europe, not just in the financial industry, but elsewhere. And the numbers are there. So how many fintech unicorns are there in the US? How many fintech unicorns are there in Europe? And there has to be a reason for that. It's not that we Europeans are dumber or have less money or whatnot. I think it's a matter of the way we regulate and the ecosystem that we create with that regulation.
Do you have any leverage to impact this as a chairman of Spanish Fintech Association, or like it's not about that necessarily?
We do, but people on the other side of the fence have much more leverage than we do. So basically, in this particular case, it's the incumbents, i.e. the traditional financial industry and the new entrants, the fintechs, and of course the traditional financial industry has more resources to lobby than the fintech industry has employees, and they've been doing this for decades, and I think it's pretty clear that they do it better because the outcome is better for. I'm not saying it's good for the incumbents, but it's better for them than for the fintechs. And I think ultimately everybody loses because all this regulation, in a way, protects the incumbents from being disintermediated, but at the same time, it comes at a cost. So if you see the valuations of banks in Europe, so Banco Santander, I can't put the exact date, but let's say 10 years ago, 10, 15 years ago, Banco Santander was the largest bank in the Eurozone, and it had a valuation similar to the largest American bank, which was Bank of America. Mm-hmm. And now it's like 10 times less, or I don't know.
Mainly because of the regulations.
Mainly because of the regulation. I think Europe is over-regulated. Mm-hmm. Mm-hmm. Actually, if I'm not mistaken, in the UK, the FSA, the FCA, sorry, the Financial Conduct Authority, has agreed to give the financial industry a break in terms of regulation, and to revisit where they stand and what direction they should be going. I mean, every year you have to spend a ton of money in changing your systems to adapt to the regulation, and that doesn't make sense. And at least if it was simple, so you get this new piece of legislation, you have a license, so your systems comply with the current regulation. There's this new piece of regulation. You ask ChatGPT, what should I do in my IT, and in my processes to comply with the new regulation? And if it's spat out, you have to do this module that does this, you have to do this other module that does that. Then perfect. It has a cost, but you know where you have to go. You can plan it, but it's not like that. It's crazy complex. So. And you're never 100% sure if you're complying or not.
You would rather spend your R&D budget on building new innovative features.
Actually, I'm not going to say what bank this is, but I spoke with a high-level manager of one of the largest banks in the Eurozone, and he told me it's been already a number of years since we don't do anything of what we would like to do. Mm-hmm. All we do is what we're mandated to do by regulation.
That's unfortunate.
Yeah.
I faced it myself firsthand when I moved to Portugal last year, and I was amazed how far behind the banking industry is here versus other countries where I lived before. It's like 10 years behind technology-wise. So now I get a better picture why. Speaking about open banking. Mm-hmm. It's a fascinating subject, and I'd like to spend some time on that. So, concept of open banking is essentially, technically speaking, is an API which can give you access to lots of information, financial transactions wise, about the customer. Is this correct understanding of the concept?
Without the API part, I would agree. So the API is one means to do that. There are others. Uh-huh. So basically, I will put it the following way. So the banking industry, it's one of the last, if not the last, industries that's still vertically integrated, meaning that they manufacture products and they sell their own products. Mm-hmm. And in essence, I'm oversimplifying here, but in essence, that is inefficient. And remember what I was saying about building blocks. Your core is either doing good products or distributing good products, but you can't be extremely good at both. So in essence, what open banking is about is separating the distribution part from the manufacturing part, so that other institutions can plug in some way into the factory to distribute those products. So in an ideal world, that would be through APIs. But until we get to that ideal world and there's resistance from the banks, there are other means to do that. So basically, the consumer or the customer is the owner, and he has already paid for his own data, the transaction capabilities, and he might want somebody else to trigger the execution of those transactions, and he might want somebody else to to access that information on your behalf and store it elsewhere, because it will combine it with other information, maybe from other banks, maybe from other sources, some other functionalities, and give you a user experience that is much better than the one that your current bank is giving you. And like I said, if you combine that concept and you change open banking with OpenX, other industries, then the sky's the limit relative to what you can do with a combination of information and transactions from different industries.
Again, it's like I smell a bit of centralized authority in this whole concept, and probably at some point it will be so heavily regulated that it will be hard to operate in that.
Well, yes and no. So on what I mean, the only thing that you can't predict is the future. Things change so rapidly that you make an assumption based on today's status quo, and then 1-2 years from now, the status quo has changed and your predictions fall apart. So that's why I'm not too fond of making predictions. But on one hand, there is a certain force towards concentration, because there are huge economies of scale. So what's the difference between the backend system of Bank A, Bank B? It's not significant. The difference between one bank and the other is mostly the perception, the branding, the user experience. The core systems are not that different. So there's the separation of the front end with the back end drives concentration on one hand, but at the same time, users are completely different, and the front ends might be widely different. So there might be a segment of the population that wants their banking combined with their telco, because I don't know, for whatever reason, younger people might rather do banking through their social network. Older people might want to combine banking with pension system. I don't know. So I foresee a very large number of different front-end systems giving different flavors of services to the consumers, whereas on the back end there will be a strong tendency to concentrate.
Right, and I think we see that trend already happening in Asia, where there are a bunch of mega apps where you can do pretty much everything from single application. Like you can order food and send a payment and chat with friends, and all in one place.
But I don't think the same super app can have beyond a certain size of the market.
Mm-hmm.
Because I remember the case where in Spain there was a social network called 20 that was bought by Telefonica, and that killed it basically, because you can't have a startup like that being controlled by 100 years old company. It will just kill the innovation and the culture. Anyhow, but one of the key success factors of that network is that younger people, 20 and under, did not want to be on the same social network as their parents, which was primarily Facebook. So people want to differentiate themselves. So although the super app concept has merits, and I understand that it's something that is very likely to succeed, you will have the white and the black super app at minimum, if not many shades of gray of super apps.
That's a good point. All right. So with your extensive experience in both management and technical roles, what future trends do you predict will be significant in fintech, and how should companies prepare to adapt?
That's a tough question. So I think first, what is fintech? In my view, fintech is the use of technology and innovation to change significantly the way financial services are provided to customers, or to create significantly new services that did not exist before. Mm-hmm. So in order to be fintech, probably you can't even change at a fast enough pace so that you're a fintech for very long. Let's say random for 20 years. After 20 years, you're just a tech company. You're no longer a fintech company. If you come to think of it, probably you can argue that companies like many banks, Visa, MasterCard, they were fintechs, but 30, 40 years later, they're no longer fintechs. That's the norm. Right. It's not something revolutionary, and it's very difficult once you have a bottom line and shareholders that you have to report to. It's very difficult to innovate significantly. So it's an innovator's dilemma, they call it. So one of the things is constant change. Be ready to reinvent yourself. And my concerns, I'm going back to what I said before, is that Europe is not very friendly with that concept. So if you look at the NASDAQ, or Wall Street, how many of the top 10 companies were in the top 10 20, 30, 40 years ago? Whereas in Europe, it's more or less the same companies. So neither Facebook, nor Apple, nor Google, nor Amazon, they didn't even exist. Well, in the case of Amazon and Google, yes, but they were not relevant companies 20 years ago.
Right.
So the challenge is to you have to reinvent yourself, and you can only do that to a certain point. So what I'm stepping outside of the fintech industry, but what Microsoft is doing is really outstanding. To once you get to a certain point and you start going down in the tech industry, whether you have the surname of Fin or Bio or whatever, or plain tech, it's very difficult to come back up again. And it's very rare what Microsoft has done. You have plenty of examples. IBM, for decades, was the company with more patents, with people in the payroll that won Nobel Prizes for what they did. Google's working for IBM. It's not that IBM hired them because they had a Nobel Prize. And where is IBM now? So most young people don't even know what IBM is. So it's very difficult to come back up. So at some point, you need to start from scratch again.
So speaking of trends, let's focus on Europe. Outside of just following the regulations and catching up with the regulation train, anything comes on your mind that the financial service community should be keeping an eye on?
Well, maybe regulation has some advantages that you could leverage and go elsewhere. So let's say you are a European company doing crypto, for instance, which is something relatively big now, being regulated in Europe. So that gives investors comfort that you're regulated, you're in a very safe space, and then you move to Mexico, to Turkey, you name it, countries with 100+ million people, and maybe that's a big opportunity for European companies. Of course, you have other challenges on top of that. which is cultural compatibility. So I'm not going to name nationalities here, but some nationalities go to Mexico and it's relatively easy for them to have success, and some others go there and crash wildly because the culture is so different. So there's some other aspects that need to be taken into account. But I think leveraging European regulation to go abroad might be a good thing. Because in Europe it's quite limiting.
I'm browsing through your LinkedIn profile, and one thing that catches my eye is the following. It's a quote from your About section. My main goal in life is to enjoy the rides, which is something there is plenty of in managing Eurobits.
I haven't updated that because my fund is no longer Eurobits,
but still enjoying the ride.
I'm still enjoying the ride, no longer Eurobits. So
is it a life philosophy or what is that? Let's chat about that.
But it comes naturally. It's not something I have deeply thought about. So, but at some point I'm not saying this is good or bad, but typically, let's say the Anglo-Saxon culture dominates the world, at least the Western part of the world, and you're constantly bombarded with messages that you need to have goals and a plan to achieve those goals. So where do you want to be 5 years from now, 10 years from now? I never had that. And whenever I read either a self-improvement book or a management book, it all sounded very good. But then when I tried to implement, I said, I don't know where I want to be in 5 years. I have absolutely no idea. All I want to know is that I enjoy every single day. So basically, like 80% of the time you're awake, you're either working or thinking on something work related. So you might better enjoy that. For me personally, I'm not saying this is good for anybody else. This is the way to go. Maybe I've been lucky because there's one of the big lessons that I have learned at Eurobits is that luck is the dominant factor for success. So you need, simplifying, you need three elements. You need some talent, you need dedication, but I think luck is the most relevant factor. So you need, without talent and dedication, luck has no role in professional life. It has a role if you buy a lottery ticket or whatnot. So to put it, you might have a lot of talent, you might work very hard, but you happen for whatever reasons to be in the wrong industry or in the right industry, but at the wrong point in time. So I look retrospectively. I consider myself fortunate. If you compare me to other people, you say you could argue that I'm a loser. But there's a Spanish saying that says that you're rich not if you have a lot, but if you need little.
That's wise.
And I have more than I ever dreamt of, and more than I will ever need. So in that regard, I consider myself fortunate. But I look retrospectively, and there are many things that are completely outside of my control that play favorable to me. And there's no way I could have conditioned them. So let me give you an example. Eurobits was founded by a number of banks. And one of the things I learned at Eurobits is that banks, I could generalize the concept, incumbents, are not very good investors for startups. So there's such a misalignment in the culture you need for a startup to thrive on the culture that is imposed by your investors, that it's close to impossible to succeed. So every time I tried to do something new, or it was always obstacles, hurdles, etc. So sometimes I said, I'm really unlucky. I'm in the right place, but with the wrong partners. But at the same time, remember I told you that we had a long journey through the deserts. One of the reasons that we survived the journey through the desert is because we had those bad investors. Mm-hmm. Because they would not give us the resources we needed to do new things, but at the same time, they would not let us die. So we arrived at the end of the desert, thanks to them, not deliberately, but it's something very strange. So, let me put you a concrete example, since the company no longer exists. So at one point, our largest shareholder was one of the largest Spanish banks called Caja Madrid. It no longer exists. It merged with 6 others to create Bankia, and then it was absorbed by CaixaBank. So this bank, and this is not, I'm not criticizing anything. It's how things work in these banks and in others. I'm just telling my personal experience. Mm-hmm. So they had this investment committee, and any relevant decision to our company had to go through that investment committee. And that investment committee took, at the time where Eurobits existed, decisions such as to approve the largest airline merger in history. Iberia, so Caja Madrid was the largest shareholder of Iberia and British Airways, to create IAG. And it also made decisions such as going to a 6 billion capital raise for one big Spanish tech company, or selling their equity at the largest Spanish utility companies for 30 billion. And who in the right mind would go there to ask for 100K for a capital raise for Eurobits to do Business X, which made a lot of sense for the company and for Caja Madrid, but the individual that has to go there, they're going to shoot me for coming here for such banal and ridiculed things. And the problem is that these companies don't have the right organization to manage companies that are so small as Eurobits, and we were no exception. So the Caja had like 800 invested companies, most of which, random number, 600 were our size. So it's close to impossible that you thrive in such an environment.
But somehow you managed to get to the end of the desert.
Yeah, but again, it was pure luck. So when Bankia was created, remember the middle step? So Caja Madrid merged with 6 other banks. At that point, one of the 6 banks they merged with was Bancaja, which was also a Eurobits shareholder. So they reached 49, by mere chance, 49.9% of Eurobits capital. And just 1 year after that, they went broke. So they bailed out. They were rescued with public money, and they were forced to sell those 600 companies or 800 companies. And Eurobits was one of them. So that gave me the opportunity to do an MBO. Again, something completely out of my control. And of course, you have to be there. You have to be prepared. I think it's Seneca. There's a saying from Seneca, the Roman philosopher, something like luck is where preparation meets opportunity, or something like that. So it's another way of saying what I said before. You need the talent, you need the dedication, so that when the luck comes in, you're ready. So, and I was ready, but without the luck, you might be ready, but nothing happens.
I want to wrap it up with something that we discussed before we hit the recording button. We're talking how should I introduce Arturo, and you said like you can introduce me like that now, but hopefully in 2 years it will be something else. What's happening? What's happening now?
That's a dream. So my son has decided to become a professional boxer. He's pretty good at it. So he against our advice, he left Spain and went to Ireland to a gym called Crumlin Boxing Club. Mm-hmm. Where Conor McGregor started boxing, and they've created a number of world and European champions. The head coach is very well respected in the boxing world. A great guy called Philip Sutcliffe, and apparently I'm not expert in boxing. I don't know where this came from, because I never promoted boxing, and I was never a boxing fan. But apparently he has loads of talent, and he wants to make a living out of boxing, and it looks promising from now. So I'm going to accompany him, and my dream would be to be the father and manager of a boxing world champion. If not, as long as he enjoys the ride as I did, I will be happy.
What a ride. Well, Arturo, thank you very much for taking the time. It was great. Thanks for sharing your details about your journey, and I enjoyed it a lot. Hopefully our listeners will enjoy it as well.
Thank you very much, Alex. It was my pleasure. It's always great to share experiences with other people, particularly when there's somebody so interesting at the other side. So it was my pleasure. Thank you very much, Alex.
Thank you. And that was another episode of the Curiosity Code podcast. Don't forget to subscribe and hit the like button, and see you next time. Bye.